the buying opportunity of a lifetime may be coming up very soon. And there are specific stocks and companies I'm talking about, which we'll go through here today. I want to explain all this because there's been so much happening, as I've said in the last few videos. I want to make sure that you're clear on everything that's happening. Now, over the last day, Silicon Valley Bank has basically collapsed. It was down 60% yesterday. It's not even showing up today. It was down 60% after market hours. And the reason I don't think it's showing at all today is because the FDIC just took it over. So they froze all trading on the stock. They are now being taken over, like I said, by the U.S. government. And there's so many companies that are scrambling for money. Now, I'm going to explain this. If you don't mind hitting the subscribe button underneath the video, I appreciate that. I'm not going to go through everything that happened to cause Silicon Valley Bank to fall down, but basically now there are a lot of clients that are scrambling for money. FDIC has shut everything down, so they're basically going to take all the money that they have and try to redistribute it. That will take a long time, though. There are thousands of U.S. startups banked at SVB, often as their sole bank, and a lot of them have over $250,000 per account. Some have 8 figures. The number one pressing issue for these startups is payroll. You can't have people work if you don't pay them. This means mass furlough. It might mean thousands of startups die before the FDIC even gets through its receivership process and releases the funds. From what I hear, there are venture debt options coming from providers like Brex, but we're going to need a lot of these options in order to avoid a mass shutdown of all American startups in the next few weeks. This is an extinction level event that will set startups and other companies back 10 years or more. Big tech doesn't care about this though because they have cash everywhere. All little startups, tomorrow's Googles and Facebooks, will be extinguished if we don't find a fix. 30% of YC companies are exposed through SVB. YC is Y Combinator. It's a way of tech companies basically getting funding and coming together and finding backers and that kind of thing. So what does this mean? What kind of opportunity does this give you? Well, first of all, let's look at the market. The market is falling like crazy. The 2-year treasury fell down from about 5%. It was actually at 4.86% earlier today. Now it's at 4.59. It was over 5% just a few days ago, and this is the largest drop in 2 days that we've seen since 2008. For 15 years, we haven't seen a drop like this. So it's important to know why this is happening. Basically, the market is now saying that the Fed is not going to be able to continue to raise rates. They can't raise rates because this is one of the reasons that SVB went down. They basically had a bunch of debt, or they had a bunch of treasuries that were paying yields, but since the Fed continued to raise rates so much, the yields are so much more attractive now that the face value of the treasury bonds or treasury notes that they had before continue to fall down because people are willing to pay less if they only yield 1.5% versus 4%, which they're paying now. So that was causing an issue. A lot of companies were trying to get money out at the same time, caused a bank run, caused a lot of fear, caused them to have to sell securities at a loss and these treasury notes at a loss. So this is causing the whole market to think that the Fed can't continue to raise rates because this was one of the more aggressive banks. They had a lot of money flow in at the same time or at one time, and they're very tech related. So it's definitely more risky, and the situation was much worse for it than the normal banks. But they're saying there are going to be other banks that collapse too. There's another bank that's eluding me right now, but it's down 40% here today because people are worried about something similar happening. Now, who else does this affect besides just this Silicon Valley Bank? Well, it affects everyone that's investing in any kind of crypto, and it affects everyone that invests in every kind of stock because this is basically the market calling out the fact that the Fed can't continue to raise rates. They're going to have to drop them so they don't break the banks. The treasury yields are falling. Usually we'd see stocks go up and crypto go up on a day like this, but there's just so much mass panic. I mean, Amazon's down 2%, Facebook's up a little bit, Tesla's up a little bit, but companies like Vici are down 4%, probably because of just mass fear as well. So this affects everyone, not just people that have money in these banks, not people that own the banks themselves, not just people with treasuries, but affects everyone. If the market's actually right, it could cause a lot of people to flow back into tech stocks, right? If the Fed starts easing up. But the problem is, if the Fed eases up because of issues or problems with just the fact that they think they're going to collapse the banking system, they're not slowing down because of inflation slowing down. So that could still cause a lot of pressure if they do have to do a second round of raises later in the year. This whole situation is making it much more difficult for the Fed. So what kind of opportunities do we have right now? Well, I think there is an opportunity if you are someone that has a sizable amount of money and you can make venture capital investments. You might have some kind of opportunity here because there are a lot of companies that lost a lot of money. I mean, this company lost 8 figures. They had tens of millions of dollars. I think there is an opportunity in some of these smaller companies, maybe ones that had, $500,000 worth of cash in there. They needed that $500,000. They're going to have FDIC cover $250,000 or maybe the company's only had $100,000, but FDIC takes a little while. Maybe there's some way that you can invest in that. Now, I don't think most of us can do that. It's very difficult, and that would be quite risky because you have to assume that these companies are still good companies. You have to do your research, all that kind of thing. Maybe this is good for some of the large tech companies, the ones that would have been thrown off from all these young companies that are trying to dethrone them or trying to innovate. Maybe something like Amazon or Facebook, Google, those types of companies that could get disrupted. Maybe they're going to just have a much stronger position and moat. That's definitely possible. I think buying these really good tech companies that are in pretty good financial situations, that have a good long-term outlook, I think that makes a lot of sense right here. For example, Amazon. I bought some of Amazon today. Some people think that it's very expensive, but the fact is they spend a lot of money on building their facilities, and I don't think they have to do that, especially going through a recession. I think they could actually show some really large cash flows, which they were doing before COVID when they started investing so much in some of their facilities. I bought some Tesla here today. Now, Tesla is up a little bit, not really too affected by all this news, but I think Tesla is pretty interesting around $170. I also bought a dividend stock. I bought Vici. So Vici is paying about a 5% dividend right now, 5% dividend yield, and they're falling down about 4%. I would think Vici would actually do quite well if treasuries fall because of the fact that they are still paying a 5% dividend yield. So, it's harder to get that yield with treasuries as they fall down. So some investors might go from those types of treasuries to something like Vici. I also sold a stock, so this shows some of the equities in my portfolio here, and this is their price versus the 200-day simple moving average. Meta is up 21%, so I sold Meta. I've been kind of layering out of Meta a decent amount recently. It's up 21%, so I put this money into Vici, into Tesla, into Amazon, and I'm quite happy with that over the long term. I mean, Tesla's down 21% over the 200-day moving average. Amazon is down 15%. And again, Facebook's up a lot. So I'm taking some money out. I also think that we could get to some pretty interesting levels for crypto. I mean, the VCs that are going to be affected by this probably have some crypto exposure. A lot of the funds that invest in these companies have crypto exposure, so we might see some kind of liquidation event here soon. So be on the lookout. I'm not saying to go invest in all these today like I'm doing, right? But I would say to keep a very close eye out. If you have some way of making money, a little extra money, you might be able to make a really life-changing investment. I'm not going to do anything that's too risky at this point, right? I'm going to be investing into really solid companies and cryptos. I would be careful too of any cryptos too far down the list because who knows if their treasuries were kept actually at this bank or some of their payroll money, that kind of thing. So I would be careful about any projects too far down the list because they could have some exposure, especially if they're over in California. I think over the coming weeks we may see a lot of these companies start to bleed and a lot of these start to blow up. It could also affect unemployment over in California and could cause a ripple effect. Who knows what happens from here, but it doesn't sound like the government is probably going to bail out this bank. It sounds like Silicon Valley was looking for someone to buy them, but that's not going very well. So the FDIC had to take over. So we'll have to see what the fallout from this is. Hopefully you're not directly affected, and hopefully we just get some decent prices on equities and cryptos and maybe real estate if this all works out or doesn't work out. Thank you so much for watching. I appreciate it, and I'll see you in the next video. Bye.